Hello, I'm Raj Chengappa from India Today and your host for Nothing But the Truth. Every week, we will deal with key issues of concern and bring you perspectives and clarity as to why these matter to you and the one clear truth that emerges from it. I'm a cricket buff and I'm interested in records, especially when they are broken. I still remember when Sachin Tendulkar overtook Brian Lara as the highest test run getter, and this was on October 17, 2008, at the Mohali grounds when Tendulkar played a magnificent innings and became the world's highest test run getter. So why am I talking about cricket scores when this entire episode is about the falling Indian rupee? That's because on June 19th, 2022, there was a new record broken by the Indian rupee. That, of course, is not celebratory because for the first time, it fell below 79 and reached rupees 80 to the dollar. This was a historic low and will be remembered for a long time to come. And one of the reasons, just to explain the phenomenon simply to you, if you bought a dollar in, say, January of this year, you would have paid rupees 75. Today, when you approach an agent for that, the cost would be around rupees 80, and if there's commission, a little higher than that. So why does rupees 80 become a kind of a benchmark that is so critical to the Indian economy? That's because the RBI, the Reserve Bank of India, and other economists say that the moment the rupee trips beyond 80 and starts falling below that, it could go into a free fall. That could cause enormous chaos in the Indian economy. It would impact a whole range of people, whether it is people like you and me, the common man, or businesses, and even government finance. As panic buttons began to be pressed in various economic circles, Nirmala Sitharaman, the Union Finance Minister, made a written statement in Parliament outlining the reasons why the rupee had fallen to this level. There are three reasons that she gave. The first was the Black Swan event that happened in February when Russia invaded Ukraine. That set off a chain reaction whose impact is even being felt right now and more seriously as ever. The first major problem out of that was that fuel and food prices began to soar, particularly oil, where even though there was no apparent shortage, prices soared where we all began to feel its impact. So oil prices was the second big reason why the rupee began to fall in its value. The third reason the finance minister gave was the global financial squeeze. She did not elaborate really what caused it, but many experts say that it was the US Federal Reserve's decision to increase interest rates that triggered the entire global financial crisis that we are now experiencing. What happened in essence was that the moment the interest rates were increased there, a lot of the foreign portfolio investors that had invested assets in various emerging economies began to pull out of them because it was more profitable and less riskier to invest in the US than rather than keep their money in these countries. And India was among them. India was one of the countries that witnessed a massive capital outflow from its shores. The estimate, as a reputed agency put it, was close to $30 billion. And it is one of the highest recorded in recent times. The only silver lining in this is what Finance Minister Nirmala Sitharaman told the Parliament, which was that as compared to other countries, and the exchange rate was falling like 9 pence across the world, India had done better. The British pound, for instance, had dropped by as much as 12%, the euro by 11%, and in comparison, India's value, the rupee value, had dropped only by 6%. She also pointed out the fact that the Indian rupee had strengthened as compared to the other currencies, including the euro and the pound, and that was a good sign. Despite whatever the finance minister said, the impression she gave was that she was on the defensive. Because if you analyze her arguments, it says that it was global forces that impacted the Indian rupee and had nothing to do with the Indian economy itself. But while she was right in many ways, one of the reasons why she was forced to make the statement was because in 2013, when Prime Minister Manmohan Singh was in charge and the rupee devalued, the BJP, the ruling BJP at that time, criticized his government, the UPA government, heavily. In fact, Prime Minister Narendra Modi, who was then the Gujarat Chief Minister, had made or equated the weak currency with a weak government. This was something that Shashi Tharoor, a very prominent leader of the Congress, highlighted when the rupee fell to rupees 80 a dollar recently. And Tharoor mockingly said that this government claimed that it was the strongest one, and yet it has given us the weakest rupee. That the Modi government was on the back foot was evident by the way the Reserve Bank of India, or the RBI, had intervened actively to stem the rupee from falling further. In fact, in the last 4 to 5 months, it has spent and dipped into India's foreign exchange reserves, which were around $630 billion just about in March, and today stands at close to $580 billion, which means that the RBI spent as much as $50 billion to keep the rupee at the level it is. If it hadn't intervened, it would have dropped further. Despite the depletion that has happened, one must state that at $580 billion, India still remains comfortable with its foreign exchange reserves and in fact can spend even more before it reaches any kind of crisis point where we need to worry about it. Now let's go into some of the reasons as to why there was so much panic when the rupee reached the rupees 80 mark to the dollar. Among them was the concerns for the Aam Aadmi and what economists called imported inflation. What this means is that the goods we buy, particularly those that are dependent on imports, whether it is air conditioners, the mobile phones that we have, even motor vehicles, all the prices of these are expected to go up, already gone up, and has begun to pinch our purses. The other impact that we have all felt is the way fuel prices, petrol and diesel, have soared in recent months. The central government did step in to cool the prices by cutting some of the taxes off, as well as state governments have done that, but it is still very high. There are also other ways that the falling rupee has impacted the middle class. Among them is foreign travel. A lot of them took holidays, and now that has become more expensive, particularly if you're traveling to the US. A couple of months ago, maybe in January, the cost of going to the US and coming back would have been a round trip of rupees 80,000. Today, it's almost twice that amount if you're traveling economy to some of the cities that are in the US. And when it comes to education, particularly in the US, it's going to be more expensive for those parents who are sending their children there. Both the tuition and accommodation is expected to go up by as much as 10%. If the common man is feeling the pinch, the government's finances are in trouble. One of the areas where the impact is being felt most is in terms of fuel imports. As you know, we import almost 90% of our fuel requirements from other countries. And the rupee's fall has seen over a period of time our fuel bill double. Last fiscal year, we spent close to $120 billion on importing fuel. And this was double what it was in the previous year. This financial year, it is likely to go up even more. The other area that is being impacted is on fertilizers, where again we import from other countries quite substantially. While these may benefit farmers, the subsidy that the government pays out, which is currently around rupees 2 lakh crores, is also likely to go up substantially, and that would impact government finances, particularly the fiscal deficit, which is already under stress. And what makes things worse is that retail inflation is at a high 7%, and this means that the poor are being impacted seriously. For industry, the third major player, the fall of the rupee has created a mixed bag, where companies need imported products, their import bills have gone up, and their profits have come down. In fact, a major study done by a reputed agency said of 300 firms, corporate profits had dropped substantially in the last 2 months. On the flip side, conventional wisdom says that exporters will have plenty to cheer about. That's because when the rupee falls, India becomes more competitive because our goods become cheaper for others to buy. In fact, there is very good news on the export side, because in the last fiscal year, exports boomed and crossed for the first time $400 billion. But because of the rising costs of imports, that was offset. The benefit that we got was offset by the fact that our import bill went to one of the highest that we have seen. The export sector that is likely to gain from the fall in the rupee, and probably has already gained, is the IT software sector that does a lot of its business in dollars. Apart from that, the pharmaceutical companies, textiles, and the auto components. These are industries that sell a lot of their goods abroad, and they are likely to benefit, though a lot of the experts that we spoke to, particularly the industry specialists, said that this could be short-lived because these things tend to get balanced out in the long run. So they're waiting and watching to see how this would benefit them. So finally, let's look at the question of whether this is the worst for the Indian rupee, or is it likely to drop much further? The RBI says that it is willing to intervene and spend even much more than what they had spent earlier to ensure that the rupee does not fluctuate violently. Their main interest is to not cause economic chaos because of the falling rupee. While many applaud the RBI for stepping in, others advise caution. They say while it is good to ensure that there is no volatility of the rupee, what the RBI should do is not intervene beyond a certain point. They would like market forces to determine the value of the rupee. And why is that so? Because then India could become more export competitive. And they point to this great opportunity, this great opening that is there, caused by multiple factors. One, of course, being the way that Russia has been weighed down or drained by the Ukraine war, and the fact that China is facing a global backlash because of its aggressive attitude. There is a lookout for alternatives, and India is seen as one of the brightest of that. India should take advantage of the changing power equations in the world and position itself as a major exporter. The onus is now on the Modi government and on business to come up with a bold vision and propel India to the forefront. This is where you can convert adversity to opportunity and bring prosperity to the average Indian. Thank you for listening to this episode of Nothing But the Truth. I look forward to having you with me next time.